Hey, welcome back to Everyday Economics. It's the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics, production of America's Talking Network. You can subscribe to all of our podcasts at americastalking.com. To support Everyday Economics, you can make a tax-deductible charitable contribution by clicking the link in the show description below. We're recording this episode on Friday, January 17th, and joining me as always, my friend and colleague and co-host of Everyday Economics, Dr. Orphe Divounguy. He's a PhD economist and, as I like to say, an all-around good guy. Hey, Dr. O, we often talk about the housing industry on this show, and I think it's, and I've had friends ask me that. It's like, hey, is that because, Orphe works at Zillow? And I'm like, no, it's not. No, because we'd be talking about it anyway. Because it's core, like, to your own personal economic picture at home. I mean, it's the biggest expense that as Americans that we carry on a monthly basis, certainly on an annual basis. We all need a place to live, food, water, and shelter, right? And
Yeah,
so,
look, the reality is we started doing this podcast well before my Zillow connection, and housing is essentially the heartbeat of the U.S. economy. It's home. Home is what feels good to us. Home is where we create memories. But in terms of economics, home is the largest expenditure. Is your largest monthly expenditure. If you look at your bills, even those with low
yep.
mortgage rates.
Unless you live in a garage and drive a Lamborghini, I mean, yeah, I would. Yeah, there's no doubt about it,
Exactly.
right?
It's your largest expenditure. It's roughly 40% of core CPI, core inflation. It's huge. It affects a lot of our decision making. And so that's why we talk about housing. And we got some fresh house. We got a fresh housing report
How
today.
fresh? How fresh is it?
Oh, it's so fresh. It dropped this morning at 5:30 a.m. my time in my time zone, and I was up for it. New construction rebounded in
Hold on a second.
2024.
You're telling me the new construction's going on? I mean, I was under the influence of the. I was drunk on the internet, not like having consumed alcohol, but I'd consumed so much internet that I was drunk and believed that construction had stopped. This is not the case.
No, no, it's not. It's not the
Oh,
case. Look,
oh,
multifamily
okay.
units. The number of multifamily units started has dropped. That's for sure. But it's dropped because there's so many of them currently under construction, right? We at some point we had a 50-year high number of apartment buildings under construction in this country. It's unbelievable what builders have been able to do in order to help bring down rents across the country, rent growth across the country. Single family starts, though, after dropping in 2023, rebounded and finished the year higher than in 2023, 6.5% higher than in 2023, slightly higher than in 2022, and only to be beat by the 2021 number, which was just like unbelievable. But remember, from 1992 to 2007, we were building more than 1 million homes. We were surpassing 1 million homes per year. But in the aftermath of the global financial crisis, that number dropped. And we never surpassed that threshold again since 2021. And now we're on pace to finish another strong year above 1 million homes being started, right? And so a home gets started, that means that home is going to come on the market in 2025. And I think that's great news for home buyers. And then some people say, well, hold on a second. With all this inventory, aren't builders losing money?
Well, I was just going to say that. Are they? Or they're not losing money. They wouldn't be
Of
building if
course
they were
not.
losing money. Come
Of
on.
course not. Of course not. Look, builders are clever. They're really good at forecasting where housing demand is going to be. And what builders are doing is they're meeting buyers where they're at. They're building at the crossroads of buyer preferences and their budgets. What does that mean? They're building smaller, they're building more efficiently, and they're building on smaller
Well,
lots.
hold on a second. They're building that way where they can build that way.
Absolutely.
And I think that is still the fundamental problem. And these cities, in particular, the Pacific Coast cities, they cry about like, oh, what can we do about this
Yes.
issue of
The
housing?
answer.
And
We've known
yet
the
they
answer
won't.
forever, right?
They won't acquiesce to higher density housing. And I mean, it's like, it speaks for itself at some point, doesn't it?
Yeah, it's so obvious. It's so
Regulatory
obvious that
state,
if you
dude.
allow builders to build townhomes and condos, if you allow them to build taller, right? If you get rid of minimum parking requirements and all that extra stuff,
Well, I'm
uh,
not all that keen about getting rid of cars. I mean, I just, that part, I'll call time out right there.
hey, I'm not calling for getting rid of cars.
Yeah,
I'm
yeah.
calling for
Yeah.
allowing builders to build. And builders have done a great job. You know what they're doing? When you look at builder, because a lot of people are like, well, new construction stocks, new construction inventory is increasing, and the price of new homes is falling. But you know what they forget? They forget that the square footage of new homes has decreased. And so the price per square foot is actually higher than it was a year ago. So builders have been fantastic at building more housing while still preserving the profit margins. And so if you see a big drop, and by the way, I don't give any investment advice, but if you are convinced that you look at a big drop in new construction, your new construction stock index, well, maybe it's actually maybe a buying opportunity. Builders have been very, very good at navigating the current environment, and they maintain their edge. Let me drop another stat. This
Yeah,
time
hit
from the
me.
National Association of Home Builders. People will say, "Well, what about demand? Isn't demand falling?" Well, guess what? Builders are using incentives, but the share of builders using incentives hasn't changed. The share of builders cutting their prices has actually gone down compared to a year ago, right? So if builders were in trouble, wouldn't you see a higher share of them cutting prices?
Well,
They're
yeah, I
not.
think the incentives would be increased, and that would be price and
Well, they,
rate.
they
And
haven't increased the incentives either. It's been the
no,
same in the last couple of years.
you
And
follow that. You follow that a lot more closely than I do. But I'm not. I mean, I'm not immune to advertising, and I mean, I consume a ton of media, and
yeah,
I'm not hearing, you know, crazy Larry kind of discounts on housing in any of the markets to which I travel in terms of housing. I think they're selling on value, and they're supposedly, well, they're positioning it on value, like value and quality. Is sort of the messaging that I'm hearing around new housing in every market that I visit.
yeah, and they're doing a fantastic job to close the gap. We have a massive housing unit deficit, right? Because of the big drop in new construction before the pandemic, and builders are really doing a great job at trying to close the gap. Um, and so it's fantastic. I mean, this is good news. Now, of course, the drop in multifamily starts this year means there will be fewer uh, apartment supply next year, right? Less apartment supply next year means rent growth, might actually be a little bit stronger, right? So that's kind of the downside for renters. Like right now might be the best moment to secure that long-term lease if you're a renter, right? Because basically you may have some concessions right now when there's still a lot of apartment buildings being supplied on the market. But in a year and a half from now, that won't be the case. And so secure that long-term lease if you're a renter, because the renter concessions and all that stuff might be going away, since there won't be as much supply of apartment rentals in 2026.
Mm-hmm. All right. Well, good stuff as always. Oh, I appreciate it. That's a great update on the housing market, and of course, I think it's typically about once a week we check on what's going on in housing. And you got your hand on the pulse of that. So I look forward to the next time we have a chance to talk housing. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other high quality podcasts at americastalking.com.